focus, the first tip I want to share with you guys over here is the principle of time. Okay, and I think I covered this before with you guys as well, where I say that if today you want to profit off a trade, you need to get two elements right? One is the direction, okay, which is not that difficult, to be honest, right? To focus on one direction, you need to get the direction right in order for you to make money, right? The other element you need to also get it right is actually timing, okay? Because you can get the direction right, but if you don't get in or get out at the right time, you might also end up losing a trade. Okay? So over here, the principle of time also help you once you understand this concept. Okay, it also helps you a little bit to prepare yourself for a potential trade, or to give yourself the expectation as to whether do you want to focus on this particular instrument right now, or is it better to leave it aside, come back another time. Okay, so we're talking about time here, and when I talk about principle of time, is actually related to the concept of impulse and correction. Okay, so if you look back a little bit on the same chart, right, we have this little push here which is impulsive, and then after that it does a little bit of a correction, yeah, and that's the nature of the market. Okay, it does a strong move, and then after that there's a good tendency it's going to go into a correction, okay, and then it does a big move, there's a high tendency it goes into correction, right? So the principle of time here suggests that if you take a look at this measurement that I'm going to do, okay, so this impulse move started on the 9th of June, okay, and the completion of it is somewhere here, which is about 15th of June, and that's about 6 days, okay. So it took 6 days for the market to actually move up in a very impulsive way, and after which you can see the market goes into a consolidation, and that took about like 12 days ish, okay. So if you put them in comparison, the impulse move is 6 days, the correction is 12 days, is about twice the duration of it. It's not exactly going to be all the time like that. Some might even argue, the correction actually extends all the way until here, and then that makes it 19 days, right? So it's about 3x, right? 6 versus 19. In any case, if we just take it over here, that's 12 days, okay? So that's about 2 times the impulse move. Now, why is this understanding important? Because if today you see this as an impulse, okay, and based on the principle of impulse and correction, you don't want to jump in at the end or at the high of an impulse move, okay? You want to wait for the correction. And to leverage on the principle of time is basically give yourself the expectation, okay, so now the impulse has more or less perhaps completed, right? How long do I need to wait for me to at least understand that, okay, maybe this correction is done, it's time for me to look for opportunities to get in, right? Is it the ideal time already? So we can actually use this little technique over here where we start to measure, right? Where does the impulse start? If you take it from here, where did it end? Perhaps here, which is today. That gives you about 7 days, right? Roughly, okay? So if we just do a multiple of 2, okay, so that is somewhere about, we need to give it like at least times 2 is about what, 14 days, okay. So we know, okay, from here, rough estimation, when will that be? That will be on the 26th of July, okay. So this little technique over here kind of give you an idea, like if you're focusing on this particular instrument, so it can be anything, right? But in this case, of course, we're looking at the US dollar. There's a good possibility from now, okay, again, nothing's 100%, but there's a good possibility that maybe from now until the end of July, we're probably going to see maybe the dollar starts to consolidate within this range, okay? So kind of give you an expectation where if this is going to happen in the DXY, then maybe you might not want to focus too much on the dollar, okay? I mean, if this is happening on any specific instrument, it can tell you that perhaps it's not time to look at it yet, okay. And you can also use this technique to roughly know when you want to start focusing, right? In this case here, we do a rough projection that's going to be like 26th of July, so maybe 2 weeks later you come back, it might be a much better time, and it's going to be clearer for you to look for opportunities on this particular one.